Hey everybody, Rob Maurer here, and today we are talking about some shockingly honest comments from Ford about their competitive positioning. We also have a so-called recall of FSD Beta, some Tesla firings which have spawned claims of retaliation for unionization efforts, and a decent amount of macro news, which is where we'll begin. Pretty volatile day in the markets today, especially with Tesla, finishing the day down 5.7% to close at $202.04 after being up earlier in the day, despite the Nasdaq being in the red all day. Both, however, selling off towards close, significant drops in the last hour of trading. So we'll talk about the likely contributors to that downtrend, but starting off this morning, we had the Producer Price Index PPI release, and not the most encouraging report. Unfortunately, if we start off with the headline numbers, month over month, headline PPI rose 0.7%. That's the biggest increase in 6 months and a sharp reversion to the down 0.2% month over month from December. Also roughly 30 basis points higher than expectations. The year-over-year number also significantly higher than expectations, but at least we are still continuing to see that decline. And then probably more importantly, looking at core PPI, so excluding food and energy, that was up 0.5% month over month, also a 6-month high in terms of that increase, and higher than the 0.3% increase in December, and then year-over-year increasing 5.4%, both of those higher than expectations. If there's any good news in here, it's that most of this increase month over month was driven by goods rather than services. So we can see that on the graph here, goods in blue, services in that maroon color. So since there have been more disinflationary signs in goods than in services across many reports, and because inflation in services is probably a little bit more sticky, a little bit slower to react to things, if I had to guess, I would imagine that the Fed would probably prefer this being driven by goods rather than services. And you can see services down a little bit in terms of that month over month increase in January from December. So while it's probably not the report that we would have hoped for, there are things in there that certainly could have been worse. So that kind of kicked the markets off on a rough note. And then this morning we had commentary from Cleveland's Fed president who said, quote, "Indeed, at our meeting 2 weeks ago, setting aside what financial market participants expected us to do, I saw a compelling economic case for a 50 basis point increase, which would have brought the target range up to 5%, end quote. However, it should be noted that Cleveland is a non-voting member right now, so they can have their input, but they don't get a vote ultimately. So that's kind of this morning. And then midday, we get the FSD Beta recall news that dropped the stock a little bit. We'll talk about that in a second. And then this afternoon, from a broader market perspective, more Fed commentary seeming to cause the sell-off this afternoon. James Bullard, St. Louis Fed president, regarding the possibility of a 50 basis point increase for the next March meeting, saying, quote, "I wouldn't rule anything out for that meeting or any meeting in the future," end quote, while also confirming that he had pushed for a 50 basis point increase at the February meeting. However, like Cleveland, St. Louis is currently a non-voting member. Still, with the Producer Price Index coming in hot, the market is obviously a little bit wary of these type of comments at the moment. And then to top things off, today's jobless claims report came in a little bit lower than expected, which sounds great, generally is great, unless you're dealing with inflation and those tight labor conditions allow inflation to continue. So somewhat counterintuitive, and these things can kind of change with the winds, but overall, a combination of things that the market probably not very enthusiastic about right now. But hey, tomorrow is always a new day. All right, let's talk about this FSD Beta recall. The recall notice was published by NHTSA today. They note that this is potentially affecting 362,758 vehicles. So that should be all vehicles in the US with FSD Beta. Right off the bat, if we look at the remedy here, as we often see with Tesla, this recall will be resolved with an over-the-air software update. So great for the media, but I definitely wish they would develop some split terminology to differentiate between a physical recall and a software update. Anyway, okay, we know it's an over-the-air update, but that can mean a lot of different things. That could mean something as harsh as removing FSD Beta functionality via that update. So even seeing that it's an over-the-air update can still be extremely concerning. In this case, though, it is not rising to such a significant level. It isn't saying, hey, FSD Beta is unsafe, take it away. Instead, Tesla is saying that after discussions with NHTSA, there are certain rare circumstances where FSD Beta could infringe on local traffic laws before some drivers may be able to intervene. So that does sound like a pretty broad characterization, which is a little bit concerning, but they do outline those specific scenarios that are the focus in this case. There are 4 of them. It's kind of a wall of text, so we'll put that in a little bit better formatting here. The first is traveling or turning through certain intersections during a stale yellow traffic light. So a stale yellow light, pretty simple, it just means that the yellow light has been on for a while. For example, if you're in the middle of an intersection and you're waiting to turn and the light turns yellow, well, you don't have a choice, you got to continue through, that is no problem. But if you're approaching the intersection that turned yellow a while ago and you just keep going through, that's a scenario you've got to avoid. So it'd be a good update to make. The question is, how easy is it for Tesla to do that? And if they could do that easily, why didn't they do it already? And I think a lot of times the answer to that is probably just prioritization. In this case, it could be a matter of just fine-tuning aggressiveness, which stuff like that is tricky because maybe that makes NHTSA feel better about it, but maybe that results in a few more annoying scenarios for drivers. And if you make things too conservative, that can present its own safety problems as well. So it's about finding the sweet spot, and hopefully NHTSA is cognizant of that. This type of stuff, I think, elevates concerns that maybe it's underappreciated, but without more information, a little bit premature to say. Anyway, the second scenario is the perceived duration of the vehicle's static position at certain intersections with a stop sign, particularly when the intersection is clear of any other road users. So I guess what they're saying here is, hey, the vehicle needs to stop for more than a microsecond, which, if that's what they're saying, is pretty frustrating and definitely elevates those concerns further. I mean, I guess there must be some legal standing for them to make this decision if Tesla is complying with implementing this change. We've already seen a recall for FSD Beta before, and that was to adjust for rolling stops, which is already quite frustrating because that's just how people drive. That's how they expect other people to drive. And they say specifically when the intersections are clear, if you're doing a full stop at a stop sign and you're sitting there for any period of time, people behind you, they're going to get mad. So if my understanding is correct, this would be a pretty frustrating thing that seems to be getting pushed onto Tesla. The third point is adjusting speed while traveling through certain variable speed zones based on detected speed limit signage and or the vehicle's speed offset setting that is adjusted by the driver. This one to me is probably the most concerning. I don't think the language is very clear in terms of what exactly it's targeting. I hope because it talks about adjusting speed while traveling through certain speed zones, that the focus is on the adjustment part and not just the speed relative to the speed limit in general. If it is just talking about that adjustment, this could be one that I actually strongly agree with because I think Autopilot and FSD Beta react too slowly to speed changes. For example, when you come into a slower speed zone area, it'd be nice if it started to slow down ahead of time so you're not flying past the sign going way too fast. That would be a really nice update, but I think the concern would be that this would be targeting going above the speed limit at all. You can disagree with me if you want, but my experience has very much been that people in general drive above the speed limit. And I think in general, aligning your speed with the flow of traffic is the safest way to drive, especially in cities. So I hope that's not what this means, but if that were the case, that would greatly diminish the value of this feature, I think. Fortunately, this just seems to be related to FSD Beta, not Autopilot, so that's probably more important in that regard. But I'll be curious to hear people's interpretation of what this point actually means. I think the easiest way to make it clear is to strip out sort of the combined nature of the sentence, since it talks about one thing and or another thing. But if we remove that part, we can just say, adjusting speed while traveling through certain variable speed zones based on the vehicle's speed offset setting that is adjusted by the driver. That phrasing makes it seem less contingent on moving from one speed zone to another, and more like a general issue with that setting's functionality. So again, hope that's not the case, but let me know what you think. The fourth and final circumstance then is negotiating a lane change out of certain turn-only lanes to continue traveling straight. I think that one's fairly self-explanatory. The question is how well Tesla can accomplish that. I could be wrong, but I'm not super worried about this. I think this is probably more of a case of NHTSA and Tesla looking at it and saying, in some circumstances, Tesla knows it's a turn-only lane, but still will allow the vehicle to go straight. So maybe just remove that possibility from the planning. I don't think it's saying Tesla needs to know every single lane, every single time perfectly, or we're going to take away FSD Beta. It's not really how I interpret it, but definitely could be wrong there as well. Of the four, I think this one is clearly the most technically difficult. The other three seem pretty easy to implement. So in terms of the impact of this overall, we'll just have to wait and see how these changes affect the product. All right, moving on, we've got an update on a story that we had talked about earlier this week, and that was some unionization efforts at Tesla's Gigafactory in New York. Now today, there have been some reports of firings at that location across the last couple of days. In terms of numbers, it sounds like it was 18 by Wednesday and 37 by today. Remember, Tesla's got about 1,800 workers there, about 800 of which work on the Autopilot team in some capacity. So you're talking about 2 to 4% or so. The New York Times reports that the workers told them in interviews that most of the people that had been fired had not been involved in the unionization campaign. So obviously, given the timing, it's going to look like and be reported as retaliation for those efforts. Maybe, but we definitely don't have all the information. The employees that were involved that may have been let go, we have no idea what other actions they were employing as a part of these efforts. And if you're in a position where you suspect Tesla may be letting you go, well, then why not spin up a unionization effort and then you can claim retaliation when it happens. The workers did tell the New York Times that Tesla typically fires a small number of workers in March following performance reviews. So people would have known ahead of time that this was a possibility around this time. They say that they had never seen so many fired at once, but 37 people, again, like 2 to 4%, that is not a huge number for this type of thing. Anyway, I know there's going to be people yelling at me in the comments today saying, you can't honestly believe that this wasn't retaliation. I don't know. Maybe it was. Maybe it wasn't. My only point is that it gets automatically reported like it was. Circumstantially, it looks that way. I'm just trying to point out that we do not have all the information. Regardless, definitely wish the best for those workers and hopefully they find something else quickly. All right, next we've got an update on the Model S and the Model X. Tesla has been contacting some owners and also updated their website, announcing a new loyalty benefit. They say that current Model S or X owners with active unlimited free supercharging are eligible for an additional $5,000 towards their trade-in value. So only S or X with free supercharging, and you have to trade it in for a new S or X. So like we have talked about before, anything tied to trade-ins allows Tesla to have a little bit of control in terms of the process. They can lower the trade-in offer, raise it, depending on the individual circumstances. But $5,000 additional is nice if that trade-in value offer is reasonable. I think Tesla knows that that free supercharging is something that people really like to hold on to, so that discourages upgrades. And if Tesla can get that back versus it being resold to a third party, they can decouple that free supercharging when they sell it again used. So that's also a nice benefit for Tesla. And since free supercharging was a lot more common a long time ago, this would be Tesla targeting a lot of older vehicles, which are going to be more likely to be wanting an upgrade sometime soon anyway. So overall, probably a pretty good move. All right, next let's talk about these comments from Ford. I thought we'd get to this a little bit earlier, but these are pretty interesting, pretty shocking comments from Ford here. Earlier this week, Ford CEO Jim Farley and their CFO John Lawler participated in a conference with Wolfe Research. Their analyst had polled 100 investors asking if they believed traditional auto companies could catch Tesla on costs. 92% of those investors said no, they would not catch up to Tesla. That's not the shocking part because I would agree with that. But Ford CEO Jim Farley also agreed. He said, quote, "I am in the 92% camp," end quote. So more extreme candidness from Farley, like we had heard on the earnings call, kind of feels like he's taking the reins from Herbert Diess in this regard, which on one hand is very refreshing to see and probably a positive sign. Acknowledging what the situation is probably the best way to move forward through it. But on the other hand, that's got to be a little bit defeating as well. From CNBC's coverage of this, they said that Farley said that Ford is less profitable than its legacy peers because it has a cost disadvantage of between $7 to $8 billion. Adding, quote, "We can cut the cost, we can cut people, we can do that really quickly, and we'll do whatever we need to. The reality is if you don't change the efficiency of engineering, supply chain, and manufacturing, the basic work statement, the way people work, the efficiency of that, it'll grow back," end quote. He noted the challenges of redesigning parts of a 120-year-old company. So pretty interesting comments to hear. Maybe some of that's being taken out of context a little bit. I'm not sure. I haven't been able to track down the entire conference or anything like that, but this is the number 2 volume manufacturer of EVs in the United States. Obviously a distant number 2, but if they don't even think that they have a chance of catching up with Tesla, what does that say for everybody else? And these are comments that are based on kind of where Tesla is at today. I'm sure they're thinking about where Tesla is heading, but I think historically that has been underestimated. So even with an acknowledgement like this, I wouldn't be surprised if that is continuing to happen. So it's pretty high praise there, and definitely one to bookmark for those people that you may have conversations with that say that other automakers are just going to come in and somehow just get some advantage over Tesla. It's just not how it's going to work. Another quick update on Ford while we're on the topic. They have shared a little bit more information on their production halt for the F-150 Lightning. They said that that has been because of a vehicle fire that happened on February 4th. And it sounds like that fire happened in a vehicle holding lot during a pre-delivery quality check. Not much other information beyond that, but they did say that they think they've got this figured out, but it could still be a few weeks before production resumes. Finally for today then, we've got an update from Renault. Their CEO has chimed in on Tesla's recent price adjustments. They've taken a very similar stance to the comments that we heard and talked about out of Kia in Europe. The Renault CEO saying, quote, "We've seen competitors moving prices up and down, etc., etc. This is their decision, but I don't think it's a very healthy practice in the long term." And quote, "As electric cars are ramping up in Europe, we need to have a healthy business. And so in the case of Renault, the last thing I'm going to do is compromise on the margins, of electric cars," end quote. Well, if you're not willing to compromise on margins of EVs during the ramp up, then how do you ever expect to get to scale to be competitive? Would love to ask that question. Would love for anybody to ask that question, because I don't think that they have an answer. I think that their answer is, well, I'm just going to wait it out and let somebody else deal with that problem. Of course, that is not how they present it. It's all about the customer, right? Like, we got to maintain our margins, but it's all about the customer. They said, quote, "Our priority will be to defend the value for the customer because those kinds of swings are kind of value destroying for the customer. Think about residual value, etc." End quote. So just like Kia, all about protecting residual value. Residual value is earned. It isn't just given by the automaker. These companies like to pretend that their pricing of new vehicles is the only thing that affects residual value. It's not true. Your competitors' actions also is going to affect the residual value of your cars, so their pricing decisions will play a role, but it's not 100% in their control like they like to pretend here. Not that they actually are caring about the residual value for their customers' sake. They're caring about it for leasing's sake and things like that. But already getting into these types of excuses, I think highlights how fragile this industry is in general, and why I think a lot of these companies are unlikely to survive this transition. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Friday, February 17th episode of Tesla Daily. Thank you.